Assalamualaikum warahmatullah. Everybody, how are you today? Welcome to Sada Education. Today, we will be looking at one interesting topic in Islamic banking and finance, and that is the time value of money. Because the payment of Murabaha and Tawarruk are made over a certain period of time. Some product like home financing will take over 20 years or 30 years. Some product like high purchase or car financing will take a shorter time. But generally, we are looking at the debt obligation of the customer to be paid over a certain period of time, and therefore the profit generated from the Islamic banking business is mainly based on the deferment, or mainly determined by the postponement of payment over time. And that is why we are trying to understand what is the justification for the payment of profit or over time. Of course, when we look at the interest-bearing loan, this is what the banking business is for, that is to charge interest on the loan, and therefore the interest income is a product of time value of money. But then when we look at Islamic banking, we are still driving the business based on the fulfillment of debt obligation over time, and therefore time value of money is something that we need to examine and discuss, so that there is clarity in the creation of profit arising from deferment, which involve the time value of money. So this will go back to our previous discussion when we look at the charging of interest and the charging of profit in both conventional and Islamic banking, where the component of the interest rate and the profit rate consists of the cost of deposit and the default risk. And our attention will be given to the cost of deposit, because this is the what we call the true time value of money. So meaning that when depositors make a placement with a bank, they will be awarded an interest income for the placement, and that would be the interest on the deposit placement. It can also be seen if we have investment in bonds, and therefore the interest or the coupon rate on the bonds is a result of the time value of money. So we need somehow to to look into this issue from both conventional and Islamic perspective, and therefore to what extent the profit rate is driven by time value of money, and whether or not profit derived from time value of money is Sharia compliant, or it is permissible in the eyes of the Sharia. But we know very well that when we talk about cost of deposit, which is the basic component of interest rate, and we know that cost of deposit account for the time value of money, and that is due to the weighting or abstinence theory, right? Whereas when we look at the spread or the default risk, which is the additional interest rate on loans based on the credit standing of the borrowing customer. So this is another dimension of time value of money, which is related to uncertainty because there is a potential loss to the bank when the borrowing customer is unable to fulfill his or her debt obligation, and therefore that component of interest rate has been set, to compensate the bank for that potential losses arising from default. Okay, so in that sense, we need to look at some of the discussion on time value of money. But then I think at the moment I will stop here, and then inshallah we will continue to look into some dimension of TVM in both Islamic and conventional banking. Thank you very much. I'll see you again. Thank you.